please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're watching Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. All the heat that is really coming in this summer is especially from Karnataka, but the market at this point is off the low point of the day. In fact, at the highest point, and Nifty Mid-Cap 100 Index, that's to be seen because it's seen a strong recovery and now almost in the green. But as far as Nifty 50 is concerned, it's 10,770 levels, and overall it's hugely in favor of the declines at the moment, Sonia.
Yes, it is, and one thing is for sure, one thing is constant, and that's volatility. We saw it yesterday, we're seeing it today as well. Market is really chopping around, but the trend is on the downside. You can see it with the large caps, Reliance Industries, ICICI Bank, L&T, all these stocks actually exerting pressure on the market. So let's see which way things go. For now, the bias seems to be on the downside, although there is a bit of recovery. But a lot of earnings coming out today, so let's go straight across to that. ITC will be coming out with their numbers anytime now. Mangalam Malu is here to tell us what to expect from this quarter's numbers. I think for the fourth time in the last 2-3 hours. Mangalam, take it away.
Well, I'll talk about three numbers which are most important for ITC. The reported numbers, the ones that will be seen. The first one is total income. We're expecting a 2.5 to 3% increase in the company's top line, reported top line. That is 11,433 crores is the number that our poll throws up. EBITDA, that one's likely to grow by about 8.5%. We're working with a number of 4,200 thereabouts in terms of the EBITDA, absolute EBITDA that the company reports. So margins are likely to improve by 200 basis points and a net profit growth of 8%. 2,900 crores is the number that the street would be okay with, or that is what is expected on the cards. Now to the numbers which aren't reported. The most important number is the cigarette volumes. So we're expecting a decline of 2 to 3%. So here's a thumb rule of how to infer those numbers. Cigarette realizations have been higher by about 10 to 11%. The cigarette segmental reported revenue will not be comparable. So just take a look at the cigarette EBIT growth. If that grows by about 8%, one can say maybe there was a 2 to 3% volume decline. Again, these are just thumb rule estimates. We have to keep an eye out on cigarette EBIT to infer the volume decline. 2 to 3% is what we're expecting. The reason why the margins will expand is because the non-cigarette, non-tobacco components of the business, FMCG business, the hotels business, as well as the paper business, is likely to do better. FMCG business, given the management thrust in their FMCG business, and papers and hotels because of the industry tailwinds that these two sectors have. So that is something we'll be watching out for. ITC, remember, trades at a discount to the FMCG peers, has been a laggard out there, primarily because earnings haven't come by. If the earnings do come by, we'll keep an eye out on the up move on that stock.
All right, thanks so much, Mangalam, for getting us the heads up on ITC numbers. Big numbers today, and ahead of that, the particular stock is subdued, but that's in line with the overall market as well. Hindalco, that is close to the low point of the day ahead of its numbers as well. It will be reporting its numbers later today, and let's take it straight across to Nigel D'Souza on the key expectations. Tell us, Nigel.
Well, Nisha, we'll expect these numbers hopefully in the next 60 minutes or so. We'll keep an eye out on that. Now, running you through the expectations, top line growth of around 10 to around 11%. That's what we're working with. There's been a big base metal rally in the last 1 year. So obviously Hindalco gains because they sell aluminium. So that's what's going to help them. And 18% growth is what we're seeing in aluminium. What doesn't really work for them is that copper volumes are a tad bit low on a year-on-year basis. So that's what compresses the top line a tad bit. Otherwise, the growth would have been phenomenal. Margins as well, there should be a compression of around 50 to around 60 basis points. A few factors play its role out here. Remember, I told you copper volumes are a little bit lower. The second factor really is that the TCRC margins, that's treatment and refining charges for the copper business, that's likely to see a bit of a compression out there. And aluminium prices have surged up, but they hedge some part of the aluminium sales. So they won't make use of the entire benefit of that because they've already hedged the selling price of some part of their aluminium. In addition to that, coal prices have been moving higher. They are ramping up their captive sources, but coal prices spike them, could hurt them a tad bit. So for Hindalco, the standalone aluminium business, we are working with a number of around 780 to around 785 crores. The volumes are more or less flattish for the aluminium business, but keep an eye out on the EBITDA number. Remember, Hindalco's aluminium business, a standalone business, is different from the Utkal Alumina business. The Utkal Alumina business comes in the consolidated entity, but the standalone aluminium business buys the alumina from Utkal. So on a consolidated basis, we'll be watching out for those numbers. Utkal, well, we're looking at an EBITDA number of roughly around 460 crores odd. Copper will be a bit of a disappointment. Top line, there'll be a bit of a compression there because sales volumes are lower. And also in terms of an EBITDA for the copper business, 390 crores. What helps them is that they have been paying back some part of their loans, so the finance cost will be a tad bit lower. Keep an eye out on those numbers, hopefully, in the next 60 minutes.
Okay, hopefully, yes. We'll come back to you for more. But for now, the market has actually recovered quite a bit. In fact, I think by the end of the show, we'll get into the green for the Nifty and the Sensex. And it's really aided by what's happening with HUL. A new high for HUL. Refuses to lose steam, and now HUL is at the high point of trade, up almost about 3% odd. Volatile, the mid-caps have actually picked up and moved into the green, and from the frontliners, you have stocks like HUL, Yes Bank, Wipro, Lupin and Tata Motors that are holding fort. By the way, Syngene is under quite a bit of pressure now. It's down almost about 5% odd, and on the flip side, you have, or rather, accompanying Syngene, names like Jet Airways, etc., also hitting new lows today. But Reliance Communication is in focus as the NCLT has admitted an insolvency plea against the company by Ericsson. That stock actually has hit new lows. It's down about 16% and has eroded so much wealth over the past many weeks and months. Rima joins in now to give us more details on all of this. Rima.
Troubles mounting for Reliance Communication. Huge fall in the stock today, down 70% in 2018. The news is the NCLT yesterday admitted Ericsson's plea against Reliance Communication under the Insolvency and Bankruptcy Code. Ericsson, in fact, had moved the NCLT way back in September 2017, got admitted yesterday, and the reason is Arcom owes Ericsson 1,150 crore. The immediate implication is that it's negative news for the banks because the recovery from Reliance Communications' asset sale to Reliance Jio now gets stuck. Arcom and Jio had gotten into an agreement. Arcom was to sell its tower fiber business to Reliance Jio for nearly $3 billion. The lenders were on board this. The financial creditors would have gotten paid with this. The operational creditors would not have gotten paid, which is why Ericsson was opposed to the deal. But now immediately, this Reliance Jio deal gets stuck because under IBC, the resolution professional will have to invite all bidders, not only Reliance Jio. So immediately, it's negative news for the banks because their recovery gets stuck. Secondly, under the IBC, can Reliance Jio even bid for assets? That's a question that we're going to ask because they are related by blood. And related party bidders are not allowed under IBC. But on the other hand, you could also argue that the businesses were formally separated by court in 2006 and therefore they're not related. So let's see what course this takes. But in the immediate term, it's negative news for equity shareholders, which is what's reflected in the stock because under IBC, equity value usually gets squeezed as we've seen in the past. And secondly, negative news for banks, especially the state-owned bank, to Reliance Communications debt because their recovery now gets delayed even further.
Oh, yes, Rima, and thanks for that because that's really reflecting on that stock as well. It is down over 16% and inching towards a single-digit figure as far as the stock price is concerned. Now, what has really recovered is Lupin Pharma Company, and it's India's second largest drug maker. And on Tuesday, it posted a net loss of 784 crore rupees in the fourth quarter due to a one-time impairment provision on certain intangible assets related to Gavis acquisition in the US. Our colleague Archana Shukla caught up with the management to get more details on the pricing pressure and the growth on the margin front going forward.
We are not in that state of, kind of disarray. I mean, even today our EBITDA margin is 21.5%, okay? Right. Which obviously from our own standards is not as great as we would love it to, but I don't think one has to be apologetic about it. At the same time, our gross margins are at 66.1%, despite having a lower salience of our brand portfolio in the US. At one time, it used to be 25, 28%. Today, it's barely 10%.
But would you be able to maintain your EBITDA margins around that 21% level for FY19?
Of course.
What sort of more cost rationalizations would FY19 have for Lupin?
In the last year in particular on R&D, we really optimized it, so we cut down on some of the drug discovery spend that we were doing. We got external funding as well, and if you've seen in the last quarter, it's basically down to 10% of sales. And this is the level that we expect it to be, at least for the next 1 year. On the cost base itself, I think we've always done lots of projects. We've never done one big comprehensive project across Lupin. That actually is what we're actually undertaking starting tomorrow actually, where we will kick off a holistic global project for the company looking at every cost that there is, and clearly this is the year to tighten the belt, and this is the year to optimize to get the best out. So that's what we're just embarking on.
We would see you moving out of certain markets,
we do want to take that one-time scan. I don't think we're going to do anything as a knee-jerk reaction, but I think you have to be cognizant. If the US starts going to a place where complex generics make sense, not regular generics, then do you spend the same amount on R&D? Do you still have the same number of R&D people? If Japan goes into deep price cuts, do you still build on that? Do you build on specialty? So I think these are the questions that we're seeking to answer. And then we want to look at the entire organization footprint.
Take a look at the markets, and it's the mid-cap index which is showing a lot of strength, a lot of rebound really coming in on that particular index. It's almost 0.25% up at the moment, and some of the stocks which are really spurring the mid-cap space at this point are the stocks like Jubilant Foodworks, which is really gaining at the moment and is adding to the momentum. Edelweiss is another one, and RBL Bank from the financial services space, and also a lot of back and forth going on in the Binani Cement case, and Dalmia Bharat is also gaining at this point. So keep an eye out for the entire mid-cap space, which is adding some bit of momentum. But obviously, the overall market is still negative, with more in favor of the declines. Let's take it straight to some earnings reactions coming in. And Karnataka Bank's strong balance sheet growth that really drove the operating profit in the fourth quarter. But remember that the divergence caused deterioration in the asset quality for that particular bank. In fact, we spoke to the management earlier in the day, and here's the outlook and also a way forward for the asset quality of the bank going forward. Listen in.
Even though there was a slight increase in the NPAs, the gross NPA is well within 5%. About 54 to 60% is ideal for us, because around 93 to 94% of our advances portfolio is a secured portfolio. So even when the slippage happens, so then there will not be much pressure on this provision side. In the power sector, I had 2-3 accounts. I have already treated it as NPA. So there was one account with around 176 crores of exposure, another account with 119 crores, another account with 17 crores. So 3 power sector advances. We have already identified the stress and categorized it under the NPA, and adequate provision is made.
Okay, well, that's the word coming in from Karnataka Bank. But let's get you some big market voices now. We spoke to Mahesh Nandurkar, the India strategist of CLSA. He says that the market fundamentals are not looking good right now. He's in fact quite circumspect on the market. He says at best you can expect single-digit growth in the markets this year. Listen in.
We are right now, the Nifty is just about 2% or so below the peak that we saw in the month of Jan. And I think, given where the macro has been heading, and, also given the fact that the bottom-up micro has not really improved as much as what the initial expectations were. I mean, while we talk about the earnings trend improving, but remember that the earnings revisions are still happening on the downside. So yes, I would be willing to take, my money, off the table, at the current levels. In the last financial year, FY18, we saw about $27 billion worth of equity paper supply. And that was very well absorbed by the market, because the domestic flow was very strong at $33 billion. Now, going into FY19, our estimate is that the equity supply pipeline is looking as big as it was last year. What we will also need to kind of figure out is, if there is sort of any headwind coming from either by way of the long-term capital gains taxes, which have already started to play out. Is there, some money moving into physical assets? Because there are some anecdotal evidence that the property markets are showing signs of bottoming out. The fundamentals of the market are not looking really that great, especially on the macro side, whether it is the bond yields, inflation outlook, currency outlook, etc. So I think macro front is clearly much weaker today as compared to what it was, let's say, 12 months ago, 8 months ago, something like that. Even from the bottom-up side, as I mentioned, while the absolute level earnings growth seems to be showing signs of improvement, but that's there in the numbers, that's there in the expectations already. And at the margin, what we're seeing is still small earnings downgrade. We are working with an assumption that over the remaining period of 2018, at best, we will get market returns maybe in low single digits. On the equity side, there are clearly certain segments that will do much better than the broader market. My sense is that over the next 12 months, we will see consumption, stocks, consumption stories playing out well, because clearly over the next 12 months, my sense is that both the central government and many other state governments as well will follow a pro-consumption policy, a pro-rural, a pro-poor kind of a policy. And in that context, a whole host of consumer names, should do well.
All right, NIIT Limited's numbers are out, and that is down almost 1%. So those are the numbers flashing on your screens. EBITDA up 22%, and take a look at that particular counter as well, reacting to those numbers. And what it does with NIIT Tech is also something to be watched out for. So management will be speaking to us in some time. Let's get you another big voice on the markets first. And Nilesh Shah, the MD and CEO of Envision Capital, believes that the election results will have no bearing on the economic growth, and that a double-digit earnings growth of 15 to 18% is on the anvil.
We don't believe that the elections of a single state can basically drive economic growth, or it's responsible for any kind of the macros that are there. So clearly, yes, it's important from a 24-hour or a 48-hour perspective. It has really very little relevance in terms of actual fundamentals. Clearly, I think probably maybe let a session or two go by, and we would be back again focused on the macros in terms of inflation, potential rate hikes, and most important of all, earnings for the quarter gone by and the outlook which corporate India is going to present. So clearly, our sense is that it's definitely going to be fundamentals and macros which will take over the outcome of one single state election, maybe in a session or two. 15 to 18% is something that even we're hoping for and betting on, and we see a very high probability of that happening, especially because we're dealing with a low base effect because of demonetization and GST. So clearly we've gone through an era of maybe 8 to 10 years of single-digit earnings growth, and clearly FY18-19 is, in our view, going to be the year where we are going to see a double-digit earnings growth, more likely in the range of 15 to 18%.